Ladies and gentlemen, welcome back to the channel. Here in this video, we will discuss your economic data for this upcoming week, my expectations for this week as far as stocks and how they will move, specifically Tesla. I think we need to talk about Tesla and this upcoming week here in this video. We do have some earnings as well as some other things to discuss, and hopefully this video helps you to be better prepared for the first week of September. With that said, let's go ahead and just dive right into it. I think first things first, let's acknowledge what happened on Friday. In case you still don't know, Tesla stock really rallied in the last 30 minutes or so of the trading day, closing up almost 4%. This was a massive outperformance. The reason for this was because Tesla, at least kind of leaked information to Bloomberg that the Robotaxi event is going to take place in the Warner Bros. Parking lot. This is a 110-acre parking lot that is pretty historical in the sense of there's been quite a few big movies that have been filmed there, like Batman, for an example. It's kind of historical in its own right. Tesla stock reacted so positively to this, even though it really wasn't much news at all, because we haven't heard anything about the Robotaxi event on October 10th in quite a while. And I think Tesla stock has sold off, well, because of that. And I think you're really not getting much hype or anticipation for this event on October 10th. There's just not that much hype out there around Tesla stock. Now, that's a good thing. You don't want a lot of hype just yet. I think Tesla stock probably rallies into October 10th as long as the economic data comes in good, as long as it looks like we're not heading into some kind of recession or larger slowdown. And that's why the economic data is so important for this upcoming week and really for every other week heading into September, and then ultimately after that, October, November, December 2025. Like, economic data is a massive catalyst now. Each and every single piece of consumer related data, of economic data, is now a major catalyst. And I think that could probably spark more volatility in the coming weeks. Now let's start with the earnings lineup, because although the economic data is going to really be the big story of this week, there are some earnings that are interesting. Tuesday and after hours, you have Zscaler, GitHub, Asana. Wednesday pre-market, you have Dick's Sporting Goods, Dollar Tree, Hormel, and some others. Wednesday and after hours, you have C3 AI, Hewlett Packard Enterprise, ChargePoint, Casey's, and some lesser known companies. Thursday pre-market, you have Neo and Toro. Thursday and after hours, you have Broadcom, big AI stock there. UiPath, Samsara, DocuSign, Planet, Braze, Zoomy, Smartsheet. And Friday pre-market, you have Big Lots. So not super important earnings, but some of those companies, like a Broadcom, can move broader markets. But as far as this upcoming week, it's all about the economic data. Now, on Monday, you don't have anything at all. Literally not a bond auction, not a Fed speaker, nothing. If there was a day to just relax and take off, it's probably Monday. Now, starting on Monday will be September 2nd, and there are some seasonal negatives that tend to happen in September. For one reason or another, September is the worst month over the past 10 years by far for markets, with a 30% win rate, negativity average over the last 10 years of negative 2.6%. The only other month that is negative on average is December. That's negative 0.2%. Like, September is a pretty rough month for stocks, okay? The last 4 years, in 2020, you were negative 4.1%. In 2021, you were negative 5%. In 2022, you were negative 9.6%. In 2023, you were negative 5.1%. So to just brush this off and say this doesn't mean anything would be false, okay? For one reason or another, stocks do not historically perform well in September. But this time, again, is a little bit different because September 18th is going to be the first Fed cut. Normally, stocks can perform well on the Fed reducing rates, but it comes down to the economy. It comes down to why is the Fed cutting rates. If the markets sniff out the Fed's cutting rates because they're concerned that the economy is weakening and getting worse, that becomes very problematic. So really, long story short, as long as the economic data comes in strong in September, it doesn't have to be a weak month, and I would expect it would be a pretty strong month in that event. Now, on the headline S&P, I'm not expecting much upside. Now, you're definitely coiling. You could break out from here. You're coiling just back and forth, sitting right at resistance around 560. You're breaking above that. You're falling back below that. The markets are trying to figure out what's, where to go next. And if the economic data comes in good, you definitely could move higher from here. But markets, generally speaking, as a whole, are kind of priced for perfection. So I wouldn't be surprised to see a little bit of downside, mainly coming from big tech, some of the areas that are overextended, and a broadening out of our markets that could ensue as long as the economic data again comes in good. Now, Monday, again, we have nothing. Tuesday, you have ISM manufacturing PMIs. This data is for August. You're expecting 47.8. Last month was 46.8. So you're expecting a 1-point improvement. But manufacturing PMIs, they're still negative. So if we could see this come back a little bit, that would be good. Although there's kind of worrying signs in the manufacturing sector still that we're probably still in a manufacturing recession. So not expecting much great news there. But any marginal improvement is going to be seen as positive. You will get construction spending month over month, expecting that at positive 0.1%. Last month, it was negative 0.3%. ISM manufacturing new orders expecting to come in a little bit better as well. And ISM manufacturing prices expecting to come down a little bit. And that would be seen as good news on the inflation front. But besides that, that's pretty much it. You do have some bond auctions, 3-month, 1-year, and 6-month bond auctions. Really not going to be important. You will get total vehicle sales as well for the month of August, expecting 15.4 million, down from last month of 15.8 million. Now on Wednesday, you have the JOLTS job openings. Now this is what's interesting about job openings, okay? Job openings, think about it like this. If you're a company and you're doing well, you're going to look to hire more people. If you're a company and you're not doing well, you're going to be laying people off, firing people, or not looking to hire as many people. So JOLTS job openings, if it comes in high, is going to be seen as good news for the economy, good news for the labor market, because businesses presumably must be doing just fine. If we come in low and do see a big drop, that's going to spook markets. That's going to spook markets a lot. So that's definitely the first big data point, economically speaking, besides ISM manufacturing. But I think this is more important than that. That could kind of spark some fears about the broader economy. So definitely keep that one in mind. We will get factory orders month over month as well, expecting that will come in at 4.5% positive. Last month, you were negative 3.3%, so pretty high expectations there as well. You will get the Fed Beige Book at 2 p.m. as well on Wednesday. Thursday, ISM services PMIs, expecting those at 51.5. Last month was 51.4. So services is very important because you have manufacturing that's been in a recession for 2 years plus now. Services have really been holding things together. Now, services have been declining, okay? There's definitely a downwards decline that has started to take place. Now, services briefly in June and April did go slightly under 50, so slightly into contraction territory. If you go back into contraction territory, markets are not going to like that. Because if services start to roll over, manufacturing's rolled over, it's going to be hard to stop any further weakening. Now, ISM services business activity expected to come in at 54, down from last month's 54.5. Services employment expected to come in at 51, down from last month's 51.1, so a little bit of weakening there as well. ISM services new orders expected to come down from 52.4 to 52.2, but just slightly, not big drops. ISM services prices are expected to come down as well from 57 down to 56.7. And again, this data is for August, so it's not as lagged behind. We'll see, though. I think all of the economic data, to a certain extent, is just very lagged behind. 3 to 6 months in some of these data points. But ISM tends to be more, current, because it's more of a survey than actual, hard data points. So that's definitely something markets are gonna pay attention to. Friday is your big catalyst. Okay, you have non-farm payrolls. Last month, after the revision, we came in at 114,000. Yikes. Okay. Things are kind of weird for the estimates. The consensus is 163,000. The forecast here, as you can see, is 100,000. So you're expecting some pretty rough numbers, okay? Not great numbers, in other words. If we come in high, markets are going to love that. If we come in at like 180,000, even 200,000, markets are going to absolutely love that. If we come in less than 100,000, markets are going to say, oh crap. With any revisions that we get, that could actually be a negative month for payrolls. So I think that is really the big story of this week. And I think, this jobs report is going to take place on September 6th. With the weak seasonals for September, if you do see non-farms miss and come in low, that could spark that seasonal weakness in September. This could be the catalyst that could cause that seasonal weakness in September. If we are going to get seasonal weakness in September, it's probably going to come from this. Now, the unemployment rate is actually expected to fall from 4.3% to 4.2%. If we come in at 4.3%, not necessarily a big deal. Yes, you would kind of miss the estimates. That wouldn't be great from that perspective, but it wouldn't be getting worse. Wall Street just doesn't want to see this get worse. Let's say we do come in at 4.4% and we actually tick upwards. Yeah, I would expect September is going to be a pretty rough month from that standpoint. Now, is that going to happen? I don't know, but it's definitely a big risk. And from that perspective, it wouldn't surprise me if markets actually trade lower heading into next Friday because of how big this catalyst will be. I think there will be some firms that want to essentially reduce risk heading into that Friday non-farm payroll report. Now, specifically for Tesla stock, Tesla is, in my opinion, the most interest rate sensitive company. It is the most economically sensitive company. So if we are heading into recession, Tesla is going to be hurt a lot worse than other stocks. If we avoid a recession and the Fed starts to cut rates, and that's the market's perception, then Tesla's going to benefit a lot more than other companies. Now, what's interesting about right now is we have this robotaxi event on October 10th. And if things go good, as far as the economic data, as far as the market's narrative around the Fed cutting rates and no recession, as long as that non-farm payrolls report, in other words, does not show another rise in unemployment or another weak, payroll number, then Tesla could do exceptionally well. And I do expect at that point, if that's the way that things play out, which I think is probably a 60% chance or so. Again, I'm not worried about the payrolls numbers for the data we're going to get this week. I'm really not worried about the data that we're going to get in September because it's so lagged behind. This is a much different story, and I would not expect strength into the end of this year because I think the data is going to worsen quite a bit by the end of this year. But the point is, you could get quite a bit of euphoria in Tesla in the month of September, as long as things go well with the economic data. And I think if September 6th payrolls report is good and markets take that as positive, Tesla stock could easily rally maybe to the 300s or so. I would find it hard for Tesla to get above that in any kind of material way, because there is still going to be uncertainty, around this event, around the robotaxi, around the economy. But that would be a substantial rally from here. Like a 35% rally in September could very well happen. Because a soft landing has so many positives for Tesla, and bringing down interest rates is so positive for Tesla. As long as that is not coupled with a recession, then we're all good. But it really just comes down to September 6th, in my personal opinion. Now, if you look at Tesla stock on a technical basis, we've been finding support here at this 20-day moving average at about $208.69. The next level to the upside that we're going to contest with is potentially around like 218 or so, but your big level is 220. That is where your 50-day moving average is. If you get above 220, then you start a larger rally up to, the 270s, 280s, 300s, in my personal opinion. Now, I really don't think we're going to get materially above 220, at least until Friday. And I think Friday is the day where we could breach into the mid 220s, the 230s, as long as the payroll report is good. But I think there is going to be, like I said, some nervousness heading into that payroll report on Friday. And it wouldn't surprise me to see stocks take a little bit of a breather, to kind of see a sell down heading into Friday after what might be a strong start to the week. Now, on that note, if the payroll report is bad on Friday, then you're up shit's creek, okay? You're going to have some fear on Wall Street, that's for sure. And I would expect Tesla's probably going to come down and test this 100-day moving average, something we have not done since August 5th, and that would be sitting at about 197 or so. So I do think this week could have a big swing in store for Tesla. Like I said, if I were to put probabilities on this, I think 65% chance of an upside move this week, that things are going to be good. Again, I'm not worried about the data coming out in September. I think it's just so lagged behind that it's going to be good enough. But there's still probably is a 35-40% chance that I'm wrong, that the data does come in a little bit weaker than Wall Street likes, and we see a larger sell-off. Again, it's not going to be hard to get a larger sell-off either, because of the historical performance in September. Wall Street's just going to kind of chalk it up to September is going to be a bad month, and I think the algorithms would start feasting on sell orders, if you will. So I think the economic data is really the main story for this week. I think that's what is going to affect Tesla and drive the next move. If it's a move higher, it could be really high. You could see a really big rally because of this robotaxi event on October 10th. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic weekend, and I will see you in the next one.